But let's get in. Vinay Jaising, CIO and Head Equity Advisory at ASK Private Wealth as well. Vinay, welcome to the show and always a pleasure to speak to you on NDTV Profit. Vinay, my question coming to you is specifically on the report. A very interesting headline when you're talking about the global uncertainties in 2026, which are at their peak, but the world is getting domesticated. That's what the focus is when you talk about India's growth story as well, where everyone's focus is on the domestic growth story. People are probably somewhere discounting, the global market impact that could be coming in as well. From here on, what is your key expectation if you have to look at 2026?
So as far as the world is concerned, the trade policy of US with the rest of the world, not just India, should come through in the next 6 to 9 months. Remember, there are mid-year elections coming in November for US, and the Supreme Court decision is also awaited, which should come somewhere between Feb and June. So that should give us some respite for markets globally, though the global markets are not doing as bad as India is. You've seen also the Japanese bond yield having moved up and the US bond yield having moved down as far as interest rates are concerned, which kind of tells you the Japan carry trade is also behind you. There are question marks on what's happening on AI world over as well. The earnings growth trajectory of the Magnificent Seven are great, but if investors start looking at, yes, that's a trade which is done, we need to look somewhere else. India is a great non-AI market for them to look at. Emerging market, China, Korea, they're up between 38% and Korea is up more than 100%. You've seen a lot of flows move out of India into them. And the question is, when does India get flows coming in? So I think the year 2026 for India should be a lot more positive. A couple of reasons. First, valuations have been corrected. Second, you're seeing in quarterly results which are coming up, some pivot of earnings momentum being higher. Third, you're seeing a much positive loan book growth. Fourth, the budget is around the corner. Having said that, the government does a lot of changes during the year as compared to what they did in the budget. We saw the GST changes come through. We saw the excise duty in tobacco increase. So the government is doing actions every month. But yes, there is an event of the budget coming up in Feb, which should help the country as well. And liquidity is a great point for the banking system in India. The key risk here is the dollar versus the rupee, which has appreciated as much as 9%. So if you were a US investor, you're 9% minus from last year to this year, and the markets are virtually flat. So that is the question you're having. Has the US rupee trade been overdone as shown in a couple of RER charts, or are we seeing the currency become a little more softer?
Interesting take there. If you have to look at India, Vinay, and let's peg it with what's happening in the AI trade globally. We have been seeing that rally that did come in terms of AI play in the global markets. It seems India will follow. Do you think that is a possibility where the non-AI market, which is India, could be one of the beneficiaries if there is some bit of trade unwinding happening there?
Well, I think so. So two questions of yours out here. First, India will follow suit for sure in increasing investments in AI. You have under 1 gigawatt of AI in the country, and that number will more than triple in the next couple of years. So you're seeing a lot of investments both by the domestic big companies as well as global companies like Amazon or Google coming into the country and investing into the space. So you will see a lot of investments in AI. That's step one. Second, for fact that, India, the top 10 market cap companies of India, very little of them, there is one telecom company, there are two IT companies, and a very small amount of their overall revenues come from AI today. So clearly, you compare that with US, the top 5 companies of US are all AI enabled. So once people think that, the AI trade has just been too strong, it takes a pause, you should see these flows come into the country.
Vinay, as you were mentioning, that valuations have now become relatively cheaper. Earnings growth is expected to kick in given the fact that government has announced various measures. So which are those sectors where you're finding, or which are those pockets where you're finding this lucrative opportunity of cheap valuations and earnings growth?
Sure. So I would break this up into three baskets. The first is the financial and consumption basket. The second is the Make in India basket. And the third is the one which runs with the budget, which is the CapEx basket. In the financial basket, you've seen liquidity being gallowed in the country. You've seen interest rates move down. And in a way, you've seen prices go down because of GST. So the loan book growth of the banks, are appealing. They were down to about 9%. They're inching up to 11. You've seen retail loan book growth go even higher at 12. You've seen some positive signs coming in the corporate world as well. That's increasing. So I would say the financial sector, more so the banking sector, where valuations look a lot more positive. That's a space which should do a lot better. Valuations there are appealing. In the consumption front, especially if I look at telecoms or auto, I put both telecom and auto in consumption because in one place the ARPUs go up as we talk a lot, and the other space, because of GST, you're being able to afford more four-wheelers and two-wheelers. You're seeing the volume growth story grow faster than the other spaces of consumption. So that's two spots I would look at, financials and consumption. Also, what has happened is with the currency moving from 82 to 91 in a year and change, there are companies which gain from a dollar trade, be it the IT companies themselves, where we've seen the rate of change of earnings cut now move up to the rate of change of inching up, I would say, not moving up substantially, but inching up to lesser uncertainties. And most of the companies are declaring better F 2027 estimates than 26. So you're seeing a positive ray there. Pharmaceutical and healthcare looks very attractive, especially the domestic angle of those companies, which have a tie-up with US. Please remember, pharmaceutical has been exempted from imports for US for tariffs. That's something we sometimes forget. And finally, the capex story. The Indian government has, invested between 8 to 9 trillion rupees in the capex, which we can see out of the 11 odd trillion rupees, be it in rail, be it in road, be it in defense. And that number, I think, is set to increase. And that's a play which we do even for the budget as far as we are concerned. So all these three parts, I think, have some lot of steam for valuations, and they look appealing to us.
Right. Picking up on the capex point that you just mentioned, yes, the number is expected to increase, but the growth rate will come down from the government side. And secondly, for a very long time, we have not seen a significant pickup when it comes to the private capital capex. So firstly, why do you think that private capex is still lagging? And in capex cycle, other than defense, which are those key sectors or segments that you're focusing on?
Thanks. First on the private capex front, if you look at the overall capacity utilization of the country, we are still at about 74, 75%. We need to inch up to 80% for overall capex to increase. Having said that, yes, lots of capex companies, be it for AI or other purposes, have increased their capex number. Our analysts tell us about $45 billion would be spent by Indian companies in the next couple of years in the AI segment. So you are seeing a bit of capex rush come from the private. But what's happening more so in the private space is they're acquiring other companies which are not doing so well, which doesn't get captured as capex. So though they are growing, you're not seeing the overall capex number of the country increasing. Having said that, apart from defense, I would say you have cement or infrastructure because of what's happening in roads and highways, ports, as well as pipes, where we would be excited as far as capex is concerned.
That's the story that everyone's betting big on as well. But thank you, Vinay, so much for joining us on the show. Always a pleasure to speak to you as well. And I think what's going to be interesting from here on is the conversations that we're going to have with Vinay Jaising on the budget as well. But moving on, big reactions coming in from Davos after